Welcome to the Deep Dive. This is where we take a whole stack of sources, really dig in and pull out the key stuff, basically giving you a shortcut to being, well, truly informed. Today, our mission is kind of a journey, looking at all these different forces shaping things: global health, economic policy, and of course the super fast-moving world of digital finance.
Yeah, I'm curious too. See what connections pop out when you put all these different pieces together.
And we've got quite the mix today. Insights from the World Bank, Bloomberg NEF, Brookings,
Right, plus crypto news outlets like CoinDesk, Cointelegraph.
financial analysis from fxstreetinvesting.com, some deep dives from the Council on Foreign Relations.
And then the crypto data specialists, Glassnode, CryptoQuant, Santiment, and also the Global Impact Investing Network, the GIIN.
So, yeah, a broad range. We're aiming to see how policy, tech, economic reality, how it all, connects. Should be interesting. Let's jump in. Okay, let's start big picture, the World Bank, how they help us get a handle on the global economy, specifically this thing called the International Comparison Program, the ICP.
Yeah.
For anyone not familiar, what exactly is the ICP? And why is it so important for, understanding where countries actually stand economically?
Yeah, the ICP is it's just a massive international undertaking. I mean, think about it. They gather something like 7 million prices.
7 million, wow.
Yeah, from 199 economies across 8 regions. It's huge, and its main job is to calculate these things called purchasing power parities, or PPPs.
Okay, PPPs.
Or
Why not just use exchange rates?
Well, because exchange rates can be, really volatile and don't reflect the actual cost of living. A dollar buys way more in some places than others, right?
Like a coffee in New York versus New Delhi.
Exactly. PPPs adjust for those differences. So they give you a much truer comparison of economic size, living standards. It helps us see how data from the ICP can monitor progress towards things like the Sustainable Development Goals. Without PPPs, you're comparing apples and oranges, basically.
Got it. That makes a lot of sense. And this ICP data, it paints a pretty stark picture when it comes to global poverty.
It really does. One figure that jumped out from the sources was nearly 1 in 2 in the world lives under $5.50 a day.
Half the world. That's sobering.
It is. And it gets more concentrated. Half of the world's poor live in just 5 countries.
So what's the deeper implication there, beyond just the numbers?
Well, that $5.50 a day figure, it's not just an economic stat, right? It points to these huge systemic challenges. It affects everything: stability, migration, health, climate vulnerability.
Yeah, it's all connected.
And seeing it concentrated in just 5 countries, it shows where targeted help could potentially have a massive impact. It's a crisis, but maybe also an opportunity if addressed right.
But it's not all bad news, is it?
Yeah.
The data shows some positive shifts, too.
Absolutely. The ICP data also catches these dynamic changes, like measuring India's economy using PPPs shows it surpassed France 25 years ago. That reflects some serious growth.
Right.
And the World Bank keeps updating its new country classifications by income level. So it's not a static picture at all. Things are changing, progress happens.
Okay, so given these economic realities, these disparities, what about solutions? We're hearing more about this thing called impact investing.
Yes, that ties in nicely.
Tell us about the Global Impact Investing Network, GIN, and how do they actually define this approach? What makes it different?
So the GIN frames impact investing as, quote, unleashing the power of capital to have a positive impact on the world. The key word there is intentionality.
Intentionality.
Yeah, it's not just about not doing harm like maybe some ESG approaches. It's about actively seeking positive, measurable social and environmental outcomes alongside a financial return.
Okay, so a dual goal. Is it big? Is there much money in it?
It's growing fast. The GIN estimates over 3,907 organizations currently manage $1.571 trillion USD in impact investing assets.
Wow, over 1.5 trillion. That's significant capital.
It is. And they're developing tools to help, like an impact target setter and impact quantifier, trying to make that positive influence more concrete.
Are there examples of this working in practice?
Yeah, one source mentioned an initiative empowering women farmers through a project like D-Tech Coffee in Vietnam. It wasn't just about coffee output. It led to measurable improvements, livelihoods, kids' education, community resilience. It shows capital can drive that kind of multifaceted change.
That's a great example. But, with any growing field, especially of evolving money and good intentions,
yeah.
Are there challenges? Do the sources mention any potential downsides?
That's a really good point. Yes, the sources do flag challenges, things like accurately measuring the impact and avoiding what's called impact washing.
Impact watching, like
Yeah.
greenwashing, but for social good.
Exactly. Making claims about impact without solid, transparent proof. That's why the GIN developing tools like the impact quantifier is so important, trying to ensure the impact is real and verifiable, not just, good PR. It's a field that's definitely maturing.
Okay, fascinating stuff on the global economic front. Let's pivot now to something closer to home for many, public health. The sources seem to paint a concerning picture about recent shifts in U.S. public health policy.
Yes, there are some definite concerns highlighted.
What are the most pressing issues coming up, especially around vaccines? And what are the actual consequences we're seeing on the ground?
Well, it touches on the very foundations of public health. One source mentioned an unfortunate consequence, the cumulative effect of some of the early actions taken over this last month to perhaps undermine the support for vaccination.
Undermining support.
Row.
And that's happening alongside actual outbreaks.
Exactly. We're seeing a significant measles outbreak. There was the tragic news of the death of a child from measles in West Texas. That's the first U.S. measles death in 10 years.
Oh, wow. That's terrible.
It is. And officials reported 124 cases in Texas, mostly West Texas, since late January, with 80% of these cases involved children.
80% kids.
And here's a really alarming statistic linking back to that undermining of support. 31 states are below the lower band of that threshold of 93% for coverage for the MMR vaccine.
93%.
Gerber.
That's the herd immunity level.
Crucial for preventing outbreaks, yeah. So being below that in 31 states, it's not just a local issue, it's a national vulnerability.
That is concerning. And beyond just vaccine uptake, the sources also talk about the federal government's approach itself, things like postponed advisory committees, questioning groups like ACIP,
Right, the Advisory Committee on Immunization Practices.
even an executive order restricting funding related to COVID vaccine mandates.
Yeah.
What are the sort of deeper effects of these policy moves, especially on the workforce? Our ability to respond next time.
The workforce impact seems profound, honestly. The sources mention substantial reductions. At the National Institutes of Health, NIH, the estimate is 1,200 employees dismissed.
1,200 at NIH.
Yeah. And at the CDC, around 1,100 individuals, with about 750 have been fired.
Fired, not just like attrition.
That's the language used in the source, yeah. And these aren't easily replaced roles. Many have highly specialized knowledge. One source used the phrase, eviscerating our next generation of public health experts and scientists.
Eviscerating. That's strong language. Creates blind spots, as another source put it.
Exactly. Blind spots makes us less prepared for whatever comes next. And it's complicated further by proposals to split NII, the infectious disease part of NIH. That could really hit funding for critical research that isn't typically profitable for private industry.
So what kind of tangible threats could emerge from these cuts, especially thinking globally? How does this domestic situation impact, say, international health security?
Well, the immediate risks are pretty clear. Maybe slower detection of new outbreaks, less capacity for developing treatments or vaccines, weaker surveillance overall. Internationally, the U.S. withdrawal from the World Health Organization is a huge factor mentioned. The U.S. was the largest donor to WHO, about 16% of its overall budget. Losing that definitely impacts WHO's global work.
Right.
Plus, USAID reportedly terminated 5,800 out of 6,200 contracts and cut its workforce from 10,000 to 1,000.
10,000. Down to 1,000. That's massive.
It's huge. And these USAID programs, they were vital. For example, they were responsible for the identification of the first COVID case outside of China.
Wait.
Yeah, and the development of the vaccine that we now have against Mpox. So, cutting these capabilities, it weakens global surveillance, global response. It creates gaps that affect everyone, not just the U.S.
It certainly sounds like a challenging picture at the federal and international level. But what about states and local communities? Are they just stuck, or are they finding ways to adapt? The sources mentioned Connecticut as an example.
Yeah, Connecticut seems like an interesting case study. Initially, they faced a lot of uncertainty and unrest because, as the commissioner there said, half of my department funded through federal dollars.
Wow, half. That must have forced some changes.
Definitely. They had to reassess, innovate, but they have seen some resumption of communication, like the MMWR, the Morbidity and Mortality Weekly Report, starting up again after a pause.
Okay, some positive signs then. What about results, like vaccination rates?
That's the encouraging part. Connecticut maintains strong vaccination rates. For MMR, they reached 97.7% in 2024, which is actually higher than pre-pandemic levels.
97%. That's impressive, given the national trend.
It is. And the commissioner there really stressed the importance of those basic foundational public health functions, safe drinking water, food safety, like dealing with a listeria outbreak, things that depend on ongoing local support and, agility.
So what's the takeaway for you, the listener?
The advice seems to be lean into your state public health department. They're the best source for local info. And get involved, proactively engage in things like vaccination campaigns, especially in areas that might be lagging. It shows local action matters, even if it can't fully replace federal support.
A good reminder of local resilience.
Okay.
Let's make a hard pivot now into the wild world of digital finance. Crypto, always buzzing. What are the sources showing right now? What's the vibe?
Yeah. Always something happening there. What's interesting isn't just the price moves themselves, Bitcoin retakes 111K as risk assets reverse off worse levels. XRP consolidating below $3, Solana rebounding.
Right, the usual headlines.
Exactly. But the why seems noteworthy. Sources suggest it's not just speculation this time, but linked to improving macroeconomic conditions and on-chain metrics.
So maybe becoming more tied to fundamentals, a bit more mature.
Potentially. It suggests the market might be getting more sensitive to those broader economic signals, which could mean, maybe a new phase, perhaps more stability or institutional interest playing a role.
Interesting. And of course, you can't talk crypto without the headline-grabbing stories. Like this Trump project floats token burning as WLFI dips 30% after launch. What's the deal with this WLFI token?
Yes. The World Liberty Financial Token. It's been quite the saga, according to the sources. You had the Trump family's World Liberty stake surges to $5 after token unlock. Yeah, on paper at least. Then proposals for token burning, basically destroying some tokens to try and boost the value of the rest. Common tactic.
Right, make it scarcer.
Exactly. But then it also falls sharply on debut. And it's been hit by these classic EIP 7702 exploit phishing scams.
Okay, EIP 7702 exploit.
Yeah.
What is that for our listeners?
It's basically a specific kind of vulnerability in smart contracts. Scammers trick people into approving transactions that let the scammers drain their wallets. It just highlights the constant need for, extreme caution in this space.
No kidding. Always be vigilant.
Yeah. And then you even have politics mixing in, with Governor Gavin Newsom teasing a Trump corruption coin just to troll him. The whole thing really underscores the, speculative, risky nature of these kinds of projects, especially ones tied to public figures.
Definitely. So while these individual tokens get the buzz, you mentioned something quieter but maybe more revolutionary happening underneath: tokenized stocks.
Exactly. This is where it gets really interesting, moving beyond just crypto projects.
It's about bridging traditional finance and digital finance.
Precisely. But it's not without scrutiny. The European Securities and Markets Authority, ESMA, they've flagged risks like investor misunderstanding. They want safeguards.
Makes sense. People need to know what they're actually buying.
For sure. But despite that caution, the innovation is pushing ahead. Platforms like Kraken, Bakkt, Xstocks, they're putting 60 tokenized stocks, including NVIDIA and Tesla, onto the Ethereum mainnet.
Wow, actual stocks like NVIDIA and Tesla represented on the blockchain.
Yep. It's a big step for what they call real-world assets, or RWA, on the blockchain, taking tangible off-chain assets, stocks, bonds, real estate, whatever, and putting their ownership record onto a distributed ledger.
What's the benefit of doing that?
Potential benefits are things like increased liquidity, more transparency, maybe broader access for global investors, potentially cutting out some intermediaries. The launch of this trusted smart chain, TSC mainnet, is mentioned as a key step for RWAs. It's this real push-pull between the potential unlocking potentially trillions in assets and the need for caution and regulation.
So for you, the listener, trying to navigate all this volatility, what's the crucial insight that on-chain data provides? How does it change the game compared to just looking at price charts?
Right, on-chain data. This is where firms like Glassnode, CryptoQuant, Santiment come in.
Right.
They're doing behavioral analytics in crypto.
Behavioral analytics.
Yeah, they're not just looking at price and volume. They're analyzing the actual transactions happening on the blockchain, wallet movements, smart contract interactions, how long people are holding coins.
So like seeing under the hood.
Exactly. It gives unparalleled insights into things like real supply and demand dynamics, investor sentiment, are people accumulating or selling, even tracking big players, the so-called whales.
Okay.
Sentiment, for instance, is mentioned as number one in tracking development activity and sentiment. They track 75 plus million labeled ETH addresses, 65 plus million labeled BTC addresses, going back years.
That's incredible detail.
It is. It lets investors potentially follow capital flows with precision and get a read on true market sentiment in a way that's just not possible in traditional finance, which relies more on, quarterly reports or broker sentiment. It's almost like having X-ray vision into the market's guts.
Fascinating. Okay, you mentioned regulation earlier. It always feels like regulators are playing catch-up. Are the sources pointing to any particular approach, maybe like Singapore's being more effective? What makes it different?
Yeah, regulation is definitely a hot topic. The U.S. crypto tax scene is described as still unsettled. Although, interestingly, one source notes the U.S. government starts pushing economic data onto blockchains as proof of concept.
Interesting. Using the tech themselves.
Right. But it contrasts with Singapore, where the narrative is, while the West regulates crypto and AI, Singapore innovates.
So Singapore's moving faster.
It seems so. They're not just talking. They're apparently deploying live systems, refining licensing, enforcing rules. Their approach is often described as more proactive, clearer, giving innovators more certainty while still having strong consumer protection. It's maybe less fragmented than what we see in some Western countries.
And that clarity is needed, right?
Uh-huh.
Especially with the scale of potential crime.
Absolutely. One report mentioned Ukraine has lost at least $10 to crypto crime. That's a huge number, a stark reminder of why clear rules and frameworks are needed to prevent fraud and, frankly, financial instability.
Okay, let's pull back again to those big macroeconomic forces. The Federal Reserve, always under the microscope. What's the latest from the FOMC, and what does their current stance mean for broader stability?
Right. The Federal Open Market Committee. They met recently, July 29-30, 2025, and the decision was to maintain the target range for the federal funds rate at 4.14 to 4.12%.
So holding steady, why?
Well, they noted economic activity had moderated in the first half of the year, but the unemployment rate remains low, and inflation is still somewhat elevated. So holding rates suggests they're still prioritizing getting inflation fully under control, aiming for stability.
Were they all in agreement?
Not entirely. Two members, Michelle Bowman and Christopher Waller, actually voted against this action. They preferred to lower the rate.
Oh, interesting. A split decision.
Yeah, it shows there's internal debate, maybe different views on the recovery path. And this kind of thing also feeds into those ongoing discussions you hear about potential attack on Fed independence.
Right. Concerns about political influence.
Exactly. If the Fed's independence gets undermined, you could see more political pressure on rate decisions, which historically leads to, well, more instability and uncertainty for everyone.
Makes sense. And the other big economic lever, trade policy. Tariffs keep popping up in our sources, often causing more confusion.
Yeah, U.S. tariffs uncertainty is definitely cited as a major market driver.
There was a court ruling saying Trump's tariffs were illegal. Shouldn't that reduce uncertainty?
You think so, right? But the analysis suggests the ruling might increase uncertainty for businesses instead.
How so?
Well, because the administration could still try other tactics, non-tariff barriers, or the legal fight could drag on. Businesses are left wondering what the actual cost of importing or exporting will be down the line.
So, still in limbo.
Pretty much. And there's even talk about what comes after the trade war, suggesting that old rules might not fit anymore, and we need something new for this global landscape. All this uncertainty makes businesses hesitant to invest, messes with supply chains. It drags on growth.
And this feeds directly into what we're seeing in markets like gold, right? Which hit a record high above $3,500.
Absolutely. You nailed the connection. Gold's rally is being fueled by this whole mix. Expectations of future rate cut bets, the U.S. tariff uncertainty driving demand for safe havens, general Fed concerns about inflation or policy, plus ongoing geopolitical tensions. Gold loves uncertainty.
So gold is up due to uncertainty. What about Wall Street? How does that sentiment compare, especially relative to crypto?
It's a really interesting contrast right now. While gold thrives on worry, Wall Street sentiment flashes euphoria, according to one source. Bank of America's Global Equity Risk Love Indicator hit a 13-month high.
Risk love. So investors are feeling bullish.
Dangerously bullish is how one source put it. Lots of optimism in traditional stocks, maybe overlooking some of these macroeconomic headwinds we've been talking about.
And how does crypto fit into that?
Interestingly, The sources note a more muted crypto market sentiment right now, despite the recent price rebounds. As we discussed, crypto seems to be becoming more sensitive to those macro conditions, which maybe suggests a different risk appetite there, or perhaps a more cautious, mature outlook compared to the current euphoria in equities. It's a fascinating divergence.
Wow. Okay, what a sweep through these interconnected systems from measuring global poverty with PPPs and the whole rise of impact
When
investing,
the really serious challenges in public health, international cooperation.
then diving into the crazy innovative world of crypto, on-chain data, tokenized assets.
And finally, back to the big levers of central banks and trade policies shaking things up.
It really underscores how tangled it all is, doesn't it?
It absolutely does. And
Yeah.
the importance of, good data, informed policy, thoughtful action, it just comes through again and again, whether you're talking disease prevention or the future of finance. Everything ripples.
So for you, the listener, we hope this deep dive gave you more than just facts, maybe a new way to see how these complex pieces fit together. Here's something to chew on. As everything gets more digital, more connected globally, how will that tension between national interests and the need for global cooperation in health, in trade, in finance, how will that ultimately shape the stability and the innovation in both our traditional and our digital financial systems long term? What really stood out to you from all this? What are you going to keep an eye on?